Hello there. I'm so glad you could join me today for this conversation. You know, for many of us, our home is more than just four walls and a roof. It's where we raised our families, where we've made decades of memories, and for most of us, it is the single largest investment we have ever made. But as we get older and transition into retirement or start thinking about that next chapter, sometimes the equity, that value we've built up in our homes over 30 or 40 years, just sits there, locked away. In today's world, things are changing. We see the cost of living rising, and we want to make sure we have the comfort and security we deserve in our later years. You might have heard the term reverse mortgage mentioned on the news or in a pamphlet. Maybe you've felt a bit curious, or perhaps even a little skeptical. That's perfectly natural. My goal today isn't to sell you anything. I simply want to sit down with you, virtually, and walk through exactly what this is, how it works, and most importantly, if it's actually a good fit for your life. Take a deep breath and settle in. We aren't going to rush through this. We are going to take our time to make sure every detail is clear. By the end of our time together, you'll have a much better understanding of how to protect your home and your financial future. Now, before we dive into the how-to part of things, let's talk about why we are having this conversation today. For those of us over the age of 55 or 62, our financial needs change. We move from the accumulation phase, where we are working and saving, into the distribution phase, where we need our assets to work for us. A reverse mortgage is a tool designed specifically for this stage of life, but it is often surrounded by a lot of noise and confusion. Over the next 30 or 40 minutes, we are going to break this down into very simple, manageable pieces. We're going to look at the basic definitions, because you can't make a good decision if the language sounds like banker speak. We're going to talk about the different types of reverse mortgages, specifically the one backed by the government, which is the most common. We will also spend a significant amount of time looking at the mistakes people often make, the pitfalls that can be avoided if you just have the right information ahead of time. I often hear from folks who are worried that they might lose their home or that the bank will take the title. We are going to address those fears head-on with facts. It's important to stay until the end of this video because the information builds on itself. If you skip around, you might miss a crucial detail about how taxes or insurance work, and those details are what keep you safe. Many people think a reverse mortgage is a last resort, but for others, it's a strategic choice to improve their quality of life. Whether you are looking to fix up the house, cover medical bills, or just have a bit more breathing room in your monthly budget, you deserve to know the truth without any high-pressure sales tactics. So, let's go through this journey together, step by step, and bring some clarity to your retirement planning. Basic concepts. So, let's start at the very beginning. What exactly is a reverse mortgage? In the simplest terms, it is a loan. But unlike a traditional mortgage where you pay the bank every month to build up equity, in a reverse mortgage, the bank pays you. You are essentially borrowing against the value of your home that you already own. This is why it's called reverse. Instead of the balance of your loan going down every month, the balance goes up while your equity, the part you own, goes down. The most common type of this loan is called a HECM. That stands for Home Equity Conversion Mortgage. These are special because they are insured by the federal government through the FHA. This insurance is a safety net for you. It ensures that even if the bank goes out of business, or if your home value drops, you will still receive your payments. Most importantly, it means you can never owe more than what the house is worth when it's time to sell. I want to repeat a very important point here, because there is a lot of misinformation out there. You still own your home. The bank does not take the title. Your name stays on the deed, just like it is now. You are still the homeowner. Because you are the owner, you are still responsible for the three big things: property taxes, homeowner's insurance, and keeping the house in good repair. As long as you live in the house as your primary residence and keep up with those three things, the loan doesn't have to be paid back. Think of it like this: your home is a giant piggy bank. Over the years, you've put money into it. A reverse mortgage is just a way to take some of that money out without having to move. You can take the money as a lump sum, a monthly payment, or, and this is a very popular choice, as a line of credit that grows over time. We will talk more about that line of credit later, as it is one of the most powerful tools for seniors today. Let's pause and think about that. You stay in your home, you keep the title, and you get access to cash. The loan is only repaid when the last surviving borrower passes away, sells the house, or moves out permanently, such as moving into a long-term care facility. It is a long-term solution designed to give you peace of mind and financial flexibility. Common mistakes. Now that we understand the basics, let's talk about where things can go wrong. Even the best financial tools can cause problems if they aren't used correctly. One of the biggest mistakes I see is when homeowners don't talk to their heirs, their children or grandchildren, about their plans. A reverse mortgage affects the inheritance. If you spend the equity in your home now, there will be less left for your family later. It's a trade-off. Having a calm, open family meeting can prevent a lot of heartache and surprises down the road. Another frequent mistake is taking all the money out at once as a lump sum, without a clear plan. It can be tempting to see a large balance in your bank account, but if you spend it too quickly on things you don't really need, you might find yourself in a difficult spot 5 or 10 years later when you actually need that money for healthcare or taxes. Most experts recommend using a line of credit instead, so the money is there only when you need it. We also need to talk about those three big things I mentioned earlier: taxes, insurance, and maintenance. Some people get a reverse mortgage and think, "Great, I don't have a mortgage payment anymore, so I don't have to worry about money." But if you forget to pay your property taxes or let your insurance lapse, the bank can actually call the loan due. This means you would have to pay the loan back or face foreclosure. It's very important to set aside a portion of your reverse mortgage funds specifically to cover these ongoing costs. Wait, let's look at another one. Sometimes only one spouse is put on the loan. This can be a huge mistake. If the spouse who is on the loan passes away or has to move into a nursing home, the non-borrowing spouse might be forced to pay back the loan or move out. Today, there are protections for non-borrowing spouses, but the rules are complicated. The safest way is usually to have both spouses, if they are both over age 62, on the loan from the very beginning. Finally, some people rush into a reverse mortgage without shopping around. Different lenders have different fees and different interest rates. Even though the HECM is a government-insured program, the costs can vary. Take your time. Talk to multiple lenders. Ask for a detailed breakdown of all the closing costs. You've worked hard for your home equity. Don't let it be eaten up by unnecessary fees just because you were in a hurry. Real-life situations. To help this all make sense, let's look at some real-life scenarios. Imagine a couple. Let's call them Mary and Robert. They are in their mid-70s and live in a beautiful home they've owned for 30 years. Their mortgage is completely paid off, which is wonderful. However, their only income is Social Security and a small pension. Every month, after they pay for groceries, utilities, and their many prescriptions, they have almost nothing left for home repairs or a nice dinner out. Mary and Robert don't want to move. They love their neighbors and their garden. By getting a reverse mortgage, they were able to set up a monthly payment that comes to them every single month. It's not a fortune, but it's enough to cover their medical copays and a weekly trip to their favorite restaurant. For them, the reverse mortgage wasn't about getting rich. It was about getting their quality of life back. It turned their house-rich, cash-poor situation into a comfortable retirement. Now, consider another situation. Let's look at a gentleman named George. George is 80 and lives alone. He has plenty of savings, but he's worried about what would happen if he suddenly needed expensive in-home care. He doesn't want to go to a nursing home. George decided to get a reverse mortgage, line of credit. He doesn't take any money out right now, so he isn't paying interest on it. But that line of credit is sitting there, growing every year. If he ever has a health emergency, he can tap into that money immediately to pay for a private nurse. It's his safety net. These stories are common across America. People are using these loans to stay in the homes they love while maintaining their independence. Sometimes it's for a new roof. Sometimes it's to help a grandchild with college tuition. And sometimes it's just to have the security of knowing there is money in the bank. Real life is unpredictable, and having access to your home's value can be a powerful way to handle those curveballs that life tends to throw at us. It is important to remember that every situation is unique. What worked for Mary and Robert might not be the best move for George. That's why you have to look at your own goals. Are you looking for immediate cash, or are you looking for long-term security? Are you planning to stay in your home for at least another 5 to 10 years? If you plan on moving in a year or two, a reverse mortgage is almost never a good idea because the closing costs are quite high. Practical steps. If you're listening to this and thinking that a reverse mortgage might be right for you, you're probably wondering, what do I do next? The process is very regulated, which is a good thing for you as a consumer. The first and most important step is actually required by law. You must attend a counseling session with an independent third-party counselor approved by the Department of Housing and Urban Development, or HUD. This counselor doesn't work for a bank. Their only job is to make sure you understand the pros and cons of the loan. They will sit down with you, usually over the phone, and go over your budget, other options you might have, and the specific terms of the loan. They will even talk about alternatives, like downsizing or state-run assistance programs. Only after you complete this counseling and receive a certificate can you move forward with a formal application. Once you have your certificate, the next step is the application. You'll choose a lender, and they will start the paperwork. This includes a credit check and a financial assessment. The bank wants to make sure you have enough income to keep paying those property taxes and insurance premiums we talked about. They aren't looking for a perfect credit score like a traditional loan, but they do want to see that you are responsible with your obligations. After the application, the bank will order an appraisal. A professional appraiser will come to your home to determine its current market value. This is a crucial step because the amount of money you can borrow is based on 3 things: your age, the older you are, the more you can get, the current interest rates, and the appraised value of your home. The appraiser will also check to make sure the house is safe and structurally sound. If there are major issues, like a failing roof, you might have to fix those before the loan is finalized. Finally, once everything is approved, you'll go to the closing, just like you did when you first bought your home. You'll sign a lot of papers, and then there is a 3-day right of rescission. This means you have 3 full business days to change your mind. If you wake up the next morning and have cold feet, you can cancel the whole thing with no penalty. It's a final safeguard to make sure you are 100% sure about your decision. Handling complex situations. I know that all of this can feel a bit overwhelming. Financial decisions, especially those involving your home, can bring up a lot of emotions. You might feel anxious about the future or worried about making a mistake. I want to take a moment to tell you that it's okay to feel that way. It's a sign that you care about your security and your family's well-being. If your situation feels complicated, maybe you still owe a little bit on your current mortgage, or maybe your home needs some repairs. Don't lose heart. Many people use a reverse mortgage specifically to pay off their existing traditional mortgage. Imagine not having that monthly mortgage payment hanging over your head anymore. That one change alone can drastically reduce your stress and increase your monthly cash flow. Even if you have some debt or your home isn't perfect, there are often ways to make the numbers work. The key is to be honest with yourself and your advisors about your situation. If you are worried about your children's inheritance, remember that you are the one living in the home. Your first priority is your own health and safety. Most children would rather their parents be comfortable and well cared for than inherit a house they might not even want to live in. Often, when families talk openly, they find that everyone is on the same page. The peace of mind you gain by being financially stable is a gift to your children as well, because they won't have to worry about how you're going to pay your bills. Take things one day at a time. You don't have to decide everything this afternoon. Take the information we've talked about today, think on it, and maybe talk it over with a trusted friend or family member. Knowledge is the best cure for anxiety. The more you learn about how these programs actually work, the more in control you will feel. You have spent a lifetime building your home and your life. You have the wisdom to make the right choice for your next chapter. Because there is so much to remember, I wanted to provide you with something helpful that you can keep. I've put together a professional PDF checklist designed specifically for Americans over 55 who are considering a reverse mortgage. It's a simple, clear guide that lists the questions you should ask a lender, the documents you'll need to gather, and the red flags to watch out for. This isn't a sales brochure. It's an educational tool to help you stay organized as you explore your options. You can download it for free by clicking the link in the description below this video. Having something printed out in front of you can make the process feel much less confusing. You can take it with you to your counseling session or use it as a reference when you're talking to your bank. It's just my way of saying thank you for spending this time with me today. I truly believe that an informed homeowner is a protected homeowner. Whether you decide a reverse mortgage is right for you or not, having this checklist will give you the confidence that you've done your due diligence. It's professional, it's free, and it's there for you whenever you're ready to take that next step in your research. Frequently asked questions. Before we wrap up, I want to answer a few of the questions I hear most often. One question is, can I ever owe more than my home is worth? The answer is no, because these are non-recourse loans. If the home sells for less than the loan balance, the FHA insurance covers the difference. Neither you nor your heirs will ever be personally liable for the extra debt. Another common question is, what happens if I pass away? Does the bank take the house immediately? No, they do not. Your heirs will typically have 6 months, and sometimes up to a year if they are actively working on it, to decide what to do. They can pay off the loan and keep the house, sell the house, and keep the remaining equity. Or, if the house is worth less than the loan, they can simply walk away and let the bank sell it. People also ask, can I still sell my house if I have a reverse mortgage? Absolutely. You can sell your home at any time, just like you would with a regular mortgage. You simply pay off the reverse mortgage balance at the closing, and the rest of the money from the sale belongs to you. You are never trapped in the loan. Finally, is the money I receive from a reverse mortgage taxable? In most cases, the answer is no. Because the money you receive is considered a loan advance, not income, the IRS generally does not tax it. However, it can sometimes affect means-tested benefits like Medicaid or SSI. This is why it's so important to speak with a tax professional or a financial advisor if you receive those types of benefits. We've covered a lot of ground today, and I want to thank you for sticking with me. We've talked about what a reverse mortgage is, the common mistakes to avoid, and the practical steps you can take if you want to move forward. The most important thing to remember is that you are in the driver's seat. Your home is your asset, and any decision you make should be one that makes you feel safe and secure. Retirement should be a time of peace, not a time of constant worry about money. Whether a reverse mortgage is the right tool for you or not, I hope this conversation has given you a sense of clarity. You have the right to live your golden years with dignity and comfort. Take your time, do your research, and always listen to your gut. If something doesn't feel right, it's okay to say no. And if it does feel right, it could be the key to a much more relaxed future. Please remember, this video is for educational purposes only. I am a narrator, not a financial advisor. Every person's financial situation is different, so you should always check with a qualified professional, like a CPA or a certified financial planner, if you need personal advice tailored to your specific needs. Thank you again for your time today. I hope you found this helpful. If you'd like to see more videos like this, where we break down complex topics into simple, calm conversations, feel free to join us again. Until then, I wish you nothing but the best. Take care of yourself and enjoy the peace of your home.